one of the things you have heard on my channel for the last year or so is I believe Jerome Powell is out to save his legacy. A year ago, if you were going to write a history book about Jerome Powell, he would have been called the transitory guy and made fun of a lot because he was clearly wrong. I have since said that I think one of his missions is to rebuild his legacy and kill the Fed put. But we had a banking accident on Friday. It grew on Sunday with Signature. We had what nobody can call anything else but a bailout on Sunday. So I want to ask Taylor, a 10-year veteran of Wall Street, did Jerome Powell blink? Did he blink?
So I don't know. I would say no to that. So if you look back to his comments, what was it, last week, last Tuesday and Wednesday in front of the Senate and Congress, moreover, his overarching theme was we're going to take rates higher and we're going to stifle out inflation at every cost that it takes. And we don't care what happens to the employment market. We know that unemployment's going to pick up because of this, but we are dead set against recreating the 1970s when rates went up, then they stopped and inflation took back off 3 times before it was controlled by Paul Volcker. So no, I don't think this was a blink out of Jerome Powell. You might disagree with that. I think that the market in the last 3 trading days has realized we are in a little bit different environment than what we had thought.
Yeah. So what I actually told my people this morning is much like you with a caveat. I don't think Jerome Powell put, I think adults in very big situations can deal with 2 crises at the same time. It's certainly not fun. But I put it out there. I said, we're going to know on the 22nd at the Fed meeting, if the Fed gives us a quarter, which I have thought they would for months, and didn't change, even when all these fools came out and said 50's coming. They didn't change. If Jerome Powell gives us a quarter, he's just managing 2 crises at the same time. Good on him. However, if he comes out and gives us a pause and said, this is a moment in time, we have some shit to deal with, we'll resume hikes next time, he blinked. That's where I come out on this.
Yep, totally agree. I totally agree. So I actually looked at this before we started this little interaction this morning. And so actually I'll rewind back a week now. A week ago, there was a 75% chance after Jerome Powell's conversation, a 75% chance of a 50 basis point hike.
I saw that.
And now there is a 0% chance in the betting markets.
Yeah. That was quick.
0. Yes. And so now it's a 75% chance that there's a 25 basis point hike, a 25% chance that there's no hike at all. So you have seen this massive repricing in bonds and the expectation for the Fed just in the last 3 days as a result of what's going on with Silicon Valley Bank, Signature Bank, First Republic Bank, and potentially more to come.
So I think the real question. So again, Powell's got to give us a quarter. He just has to.
I agree. You still have inflation as the primary issue that we see in this country right now. Is that narrative changing? It certainly is. But at this point, inflation is still enemy number 1.
So let's play this out. Let's say he gives us a quarter. We get the bullshit statement, blah, 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 blah. Now it's Q&A time.
This is where it's going to get interesting. I agree.
Yeah. Now it's Q&A time, because the question is, does he talk pause potential at the next meeting? Or does he say we're still data dependent? The CPI was this, that, the other, we're still on track to deliver another quarter. Because again, I haven't changed my opinion. I think we have 2 25s coming. We'll see.
I agree. So look at it this way. Like, is the Fed that upset about what's playing out in the banking sector right now? Are they that upset about this?
Well, that's very interesting, because again, so this is really wild. So I'm sitting there Sunday afternoon, pre-announcement, trying to play this game, game theory this. And I said on my channel, so I have receipts, that the Treasury or FDIC, whoever should be the top of the food chain, should guarantee deposits up to 85%. That was what I said. Because you got to keep the engine going. But these people knew the rules and they still played the game. So they should have some at-risk capital.
Yep. Fine.
So if they would have done that, I think Jerome Powell would have been ecstatic. But right now, because they came out and said everybody's money good,
you're good.
Freaking risk profile. Again, what does that mean? That means go to the bank that pays you the highest interest rates, that doing the dumbest shit, and you're going to be bailed out anyway. I'm like, guys, you can't get out of your own way. What the hell are you doing? Either
Yeah.
the rules or they're not. What the hell?
Yeah, yeah. And one thing that we talked about banking sector on the last episode a little bit, but one thing we didn't discuss is the meaningful difference that you have in online banks providing yields versus that of the traditional brick and mortar banks. Because brick and mortar banks are still paying nothing. Some of these online banks are paying 4.25. Where are they investing their capital in order to make a spread and make money? I get that they're not having real estate and things like that.
They don't have
That's an
brick and mortar,
expense
but
to
that's not
alleviate.
4%.
Correct, correct. Some of them are yielding like over 4.25 right now. It's like,
See,
uh-oh, now
this is crazy to me. This basically says everybody move all of your bank deposits to these fly-by-night online institutions that, oh, by the way, must be FDIC insured. Let's just add that caveat. If it's a fly-by-night without FDIC insurance, you're an idiot. You're a fool.
Yep.
But as long as they have that stamp, they're paying those fees. They just said money's good. So why wouldn't you? Now, I'm not recommending that because I think that's crazy. But that's the human behavior.
Yeah, and it's like, you talk back about stablecoin. Like stablecoin, people were saying, hey, you could just put money in stablecoin and get a 12% yield on your money, and you're good because it's safe. Well, obviously that didn't pan out.
That didn't pan out.
Going to continue to transition now into this more traditional banking sector as well.
Yeah, I think this is a bailout. You can't call it any other way. I am happy that the stockholders went to zero, bond, all of that. So it's not the same bailout. Correct. But a bailout by no other name. It's still a bailout.
Yeah, a bailout in 2008, for reference, was the government stepping in, backing JP Morgan, Goldman, et cetera, and they continued business as normal, and their shareholders end up profiting. Now, it took them years to get there, but ended up profiting down
everybody
the line.
Money good. And, oh, by the way, the federal government made a profit on TARP. Let's not forget that caveat, right?
Correct.
They made a little money on that. But again, I don't, back to the question at hand, I don't think Jerome Powell blinked. I think adults can deal with two problems at the same time. But dude, we're going to know on the 22nd. Yep, we're going to know. Agreed. If he pauses, oh geez, all hell breaks loose.
Yeah, I think you're right. I think listen, at one point there was 50 baked in, and he was probably, well, you disagree on this. I think he probably would have gone there if the market expectation was still sitting there.
Yeah.
I think he probably would have gone there. Now, I don't think he can go to zero now. So, again, this is going to constrain credit further. And that is what the Fed is trying to do. Right. So I don't know that they look at this and say this is some massive failure unless it really compounds and transpires from here.
Yeah. So we're going to know a lot, but you know what we're going to do in the next video? We're going to talk about what normally would be the most important thing of the week, and that is CPI. You and I always take guesses, over-unders. We're going to talk about it because it will be important tomorrow. At least,
yes, it will.
Actually, let me say this. I hope it's important, because if it's not the most important thing tomorrow, something else blew up. Taylor, where can people find you?
Yeah. Follow us on Instagram and TikTok. We do a couple different things on each of those platforms. We're at Life Goal Investments.
Thanks, buddy.